All right, let's get started. Forget about hot tips and stock picks. Today, we're going to build the engine. What you're about to see is a professional-grade framework for investment analysis. We're going to use Walmart as our case study here, not to tell you whether you should buy or sell it, but to really show you how a professional thinks.
So, how do you separate the real signal from all the noise out there? I mean, this is the great filter, isn't it? The market is just this fire hose of information, and honestly, most of it is just noise. Amateurs, well, they tend to drown in it. They're always searching for that perfect, complete data set that's going to give them 100% certainty. And you know what? That search is a fatal flaw in their process.
And let's be really clear about something. Perfect, clean, comprehensive data, it just doesn't exist. Not in the public domain for real-time analysis anyway. It's a total myth. And chasing after it, it's a complete waste of your most valuable asset, your time.
So the professional's edge, it isn't having better data. It's having a superior process for looking at the imperfect data that we all have. And that's exactly what we're going to do. We're going to construct that process, piece by piece, starting right now.
Okay, here's our roadmap for today. First, we'll talk about a pros framework. Then, we'll get into gauging market momentum. After that, we'll analyze the earnings engine, cover confirmation and final filters, and finally, bring it all together with executing the strategy.
All right, Section 1, Market Momentum. Look, before we even glance at a single fundamental number, we have to read the tape. A professional never fights a strong trend. So the very first step is to figure out if the market's current is with us or if it's pushing against us.
We call this the momentum cascade. And its purpose is really important. It helps us tell the difference between some fleeting, news-driven price spike and a durable, institutionally supported trend. And believe me, that is a critical distinction. Now, the calculation itself is a disciplined three-step process. It's mechanical and it's non-negotiable. First, you resample daily prices to weekly closes. Second, you compute the weekly returns. And third, you calculate the cumulative returns over those key time frames we talked about. This is your first gate. Getting a green light here is an absolute must. All three of those time frames, the 4, the 12, and the 24-week, have to be positive and they have to be rising together. If this condition isn't met, the analysis stops right here. We do not proceed. Period.
Okay, Section 2, the earnings engine. Now, once we've confirmed momentum, and only then do we earn the right to look under the hood at the fundamentals. Now we get to analyze the engine that drives all long-term value, a company's earnings.
Our metric of choice here is the trailing 12-month earnings per share, or TTM EPS. The reason we use this is because it smooths out all that quarterly volatility. Our objective is simple. Identify a clear, sustained uptrend in profitability. We're looking for a pattern of higher highs and higher lows over multiple quarters.
But listen, a rising earnings trend is just a prerequisite. It's not the final conclusion. Analyzing a company in a vacuum is a classic amateur mistake. Those numbers, they mean absolutely nothing without context. And this is a key point where retail and professional analysis really diverge.
So you have to ask this question, because value is always relative. Are you paying a fair price for this stream of earnings? That's what we need to find out.
First things first, we've got to establish a baseline. So we compare Walmart's price-to-earnings ratio against the S&P 500. Is it trading at a premium or maybe a discount to the market as a whole? This gives us that big picture macro valuation context.
And then we narrow the focus. We compare Walmart's PE to its direct competitors right there in the consumer staples sector. You know, is it the most expensive house on the block? This micro context is absolutely crucial. Now, the conclusion here is critical. The data shows that Walmart is, well, richly valued. It's trading above its historical average and at a premium to its peers. A professional doesn't see this and think, sell. No, they see it and think, wait. The discipline is in waiting for that valuation to become more favorable.
So that brings us to Section 3, confirmation and filters. We've assessed momentum, we've looked at valuation, and now we add final layers of confirmation. These are designed to stack the odds even further in our favor.
We use two primary filters. The first one is the Zacks rank, which is a quantitative measure of earnings estimate revisions by analysts. We want to see a rank of number 1 or number 2. The second is insider activity. We're looking for open market purchases by the executive team. I mean, that's the ultimate skin in the game signal, right? Now, in Walmart's case, the insider activity is mostly selling. A professional understands this isn't an automatic red flag. It could be for tax planning or just diversification. But it is a missing confirmation. The absence of buying means we have to demand a more compelling valuation before we even think about acting.
Okay, Section 4, executing the strategy. Now we assemble all these components into a cohesive, rules-based approach. This is not about a gut feeling. Think of this as a pre-flight checklist before you deploy your capital.
This 5-point checklist, it removes emotion and guesswork from the equation. Every single one of these conditions must be met before capital is put at risk. And if one condition is weak, like that insider confirmation, well, we compensate by demanding a stronger signal somewhere else, like a much more attractive valuation.
The whole purpose of this entire framework is to systematize your decision-making process. It's all about replacing impulse with discipline and patiently waiting to act only when the data confirms you have a high probability setup.
So, you've been given the framework. You have seen the process. The question isn't whether the framework works. The question is whether you have to discipline to actually apply it. And that is the final and most important step.